Good evening, this is Giuseppe Basile. I'm the SHO. You can find at the blog fibstalker.com. I also post regularly on Twitter using the fbstalker nickname. Good evening, today is Sunday, June the 23rd, 2013, and this video is a brief review, daily update of the four markets I follow. I'm going to review the daily chart of the EURFX currency futures contract, the dollar index futures, the US dollar versus the Canadian dollar Forex pair, and the SP 500 D-mini futures. Let's start from the daily chart of the euro. Please review the weekly update, the weekly review as well. The euro is has been experiencing a participation on the upside at the beginning of April and then mid of May, and this participation was enough to break the opposing shorts that were located in the area that we have identified, the 132.40 to 133.60, and so apparently here the bears have failed, and there is no logical explanation for the bulls not entering and supporting again this market, because they did twice in April and May, and this participation was enough to break shorts. Now, what is logical in the market not always takes place, but we need to anyway keep in mind that we have two important levels of support here. The first one comes at 130.90, and the second one has been already tested. Has been tested on Friday, and this is the 131.10 area. As you can see, the market opened with a gap down just at that level. So to me, this market has still the potential to reverse and keep moving higher into that 141 level, and of course it depends on what will happen with the dollar index. If money will keep getting out of the equity markets next week, we need to know where that money is coming into, whether in the dollar index or will it start going to commodities, oil, gold, and grains and so on. So in order to confirm this actual support, we will use the 15 minutes, and I want to show you what happened last week. We had this initial measure move lower. We hit first and second target, so we started trading in extensions, and these extensions failed, as we can see here. They were initially respected, the level 132.27 brought price into 131.67 to the pip, and the next trace in this sequence of extensions failed, as you can see here, and the price on the 15 minutes started trading on the long side, as we can see here, because measure move higher started being respected. The 132.64 level was of target was hit with a front run, but and what happened is that the next level of support was initially respected, this 132.30, and then price failed below it. And if we are looking at what actually traded on the short side last week, it was on the 4 hour there was this level. So on the 4 hour chart there was another set of programs that actually, as you can see, to the picked up the 32.60 price and brought price into this 131.25. So at current lows, if we don't print lower lows here tomorrow, my level at which I would like to get involved on the long side would be 132.50 level, with a stop of course below lows. If we print new lows, this level will move lower. Moving to the dollar index, we had this huge move higher after the FOMC meeting last week, and we are actually hitting, price is hitting this resistance. So we'll need to see whether this resistance holds and price reverses here and starts moving on the short side, or whether we break this level, and then we actually would be in a confirmed wedge here, and price could go either directions. The US dollar versus the Canadian dollar, we actually hit the stop last week, and price seems to be respecting this busted setup here. Anyway, it's better to study this market on the 15 minutes. On the 15 minutes we can see that the sequence of measure move higher never failed, and I'm going to show you again this sequence. He had this initial move higher, it was this spike higher, so we traced from highs to highs, and price actually initially broke, but then respected this level. Actually, there is a better trace for this probably for this initial move. The initial move is not very important, because what is important is what happened later on. Price hit first and second target, and then started trading in extension using the new high to highs. This first trade with a front, and then again price traded the 103.32 level, and then we hit first and second target. So the market again started trading in extensions, and as you can see, price then traded the next level with a small front run here, and that's the current setup. So price is actually respecting this setup and keeps moving higher. So if price comes back before hitting the next minus 23.6 target, which I'm going to show you in a minute, it's just above, is this 105.13. So if we don't hit, if we reverse before hitting that level, then this 104.20 is the next level of failure, and we can go short with a stop above the highs. Finally, the SP 500, as we know, we have as a target, we have this 1500 level, but the SP 500 likes to retrace a lot. It's a very clunky market. It goes up and down, and we have two levels we have to watch. The 1649 two lows. This could be a level of resistance, 1610, and we also have this 15-day moving average is lining up with it, and we have a support in 20-week moving average, which I showed you in the other video. Another level that we need to watch is the 1625, and it's coming from the all the way halfway back retrace from highs to Friday lows, and this is the one, the 1625. So I will lower my stop up just above 1638, so 1638.50 will be my stop, lowered from 1649, because if we move above this level, there is still the possibility of retest of highs, and we need to be patient and again trade this market on the short side when we see the sequence of measured move failure again. Now I want to also remind you that if we get a reversal in the 1610 or 1625, we will use the 4-hour confirmation breakout to enter again this market on the downside, and we will see what happened on at the beginning of this week, but I anticipate a retrace higher into 1610 or 1625. I hope this review will be useful for your trading next week. This review is only for newsletter subscribers, so if you want to receive this video, just subscribe the newsletter for free. You can go on the website, and on the left side there is an icon. You can click on it. It takes 10 seconds to register. Thank you very much for your attention, and have a great trading week. Bye bye.